Hi, and welcome to another edition of CMS Forex News. I'm Christina Robinson, and today is Wednesday, April 2nd, 2008. In the UK, mortgage approvals remained at the 73,000 level for February. Consumer borrowing increased to £9.8 billion, marking the biggest appetite by consumers for lending in 5 months. Borrowing in order to finance mortgages, however, remained at the same $7.4 billion level as the previous month. In the U.S., the ADP employment report showed a surprising gain of 8,000 jobs in the private sector. Gains came from the service-providing sector, while the goods-producing sector shed 77,000 jobs, the 16th consecutive monthly decline. Overall, this was a weak report masked by better-than-expected numbers. U.S. factory orders fell for a second month in a row in February by 1.3%. Weaker orders show that firms are already scaling back activity in anticipation of weaker growth. The euro-dollar pair had been trading higher prior to the New York releases. Following the ADP report, the pair fell in favor of the dollar, but after the factory orders and Bernanke's testimony, the dollar gave up those gains and proceeded to move above 1.5650. This breaks a downtrend that had moved the pair more than 300 pips since its high on Monday. The pound snapped a 4-day losing streak against the dollar and gained versus the euro as well. The pound-dollar pair found support near 1.9750 yesterday and rallied 140 pips today. The pair was as high as 2.02 last Thursday. The dollar did manage to gain against the yen as prevailing investor confidence and risk appetite continued overnight and into the first half of New York trading. The yen fell across the board after Fed Chairman Bernanke's testimony to Congress. He believes the bank will not need to pull another creative intervention like the case of Bear Stearns. One example is the pound yen, which climbed 230 pips from its open and was up more than 630 pips from its low yesterday. UK stocks rallied as investors see the financial market storm passing. Many, however, are still wary of a slowdown in the overall economy. The Aussie yen pair rallied 150 pips today and 330 from yesterday's low to today's high. At around 1 p.m., the pair hit resistance and was reversing slightly. With benchmark rates at 7.25% and 0.50%, Australia's currency is often used in carry trade with the Japanese yen as the countercurrency. The quest for higher yields is helping to prop up commodity prices as well, which helped boost the loonie in the Canadian dollar-US dollar pair. It broke 3 sessions in which the dollar had been gaining. The pair reached above 1.03 yesterday but fell 150 pips at 3 p.m. and was trading near 1.0150. Overnight and tomorrow, several nations will release their measures on services sector activities. They include Australia, the Eurozone, the UK, and the US. Europe will also post retail sales data while the US reveals weekly jobless claims. And that completes today's news. Thank you for watching and join us again tomorrow right here at CMSFX.com.